This is Tony Novak, here to share a few points on saving taxes and staying out of tax trouble. Today's topic is a easy and light topic. We often talk about people who go from W-2 jobs to 1099 independent contractors or gig workers, as they're called, and the taxes can often be challenging and they can often be messy and cause pain and angst. This episode is about the opposite. We have I worked with a 1099 contractor healthcare worker who's apparently doing a good job and impressing the company she's working with, and so she expects to receive a W-2 employee offer and an opportunity to switch to being an employee. Now, the attractiveness of the independent contractor is often the gross pay number, the hourly rate, or whatever. The basis of pay is often high compared to salary, and it's initially attractive. But once you factor the taxes, the benefits, the 401k, the time off, and any other benefits, it becomes less attractive. I find that's particularly true in healthcare. So in most cases, if a person has the opportunity to go from being an independent contractor to an employee of a healthcare company, it usually works out better. So how do we handle the taxes? Well, here we are mid-year, so we're just going to say, going to call it a half year as an independent contractor. And in this case, as hard as I try to get this person to make estimated taxes, no estimated taxes have been paid. So we have half a year's earnings and no taxes paid. We will go on a salary for the second half of the year, and of course, taxes will be withheld. What we will simply do is do a calculation. I'll do what's called a pro forma tax return of what we expect the whole year to look at the total taxes, divide that by the number of payrolls that she expects to have for the rest of the year, and we will manually by going on to the employer's payroll portal, adjust the withholdings to that amount. So then when it comes to the end of the year, there's no taxes due and everything works fine. Nobody had to make a payment or make any extra effort. The money is automatically withheld from taxes and works out well. It's the simplest thing to do. The follow-up question she had was, well, what do I do with my old company, my LLC? She said, I might do a little bit of work. I might do a little consulting still. And I said, keep it open for the small cost of keeping the LLC open. The additional tax benefit is that whatever ongoing expenses you might have for keeping that company open and offering the opportunity to do business, that's still legitimate business expense. So you'll get a little bit of tax benefit if you're considering trying to do some business, and whether it works out or not. Maybe you're too busy to do any independent contracting. That's okay, but you can keep the LLC open, your self-employed business open, and make a decision about what to do for 2026 much later on. Would love to hear your thoughts or comments, feedback on this type of personal financial planning, personal tax planning. It's that time of year where it's opportune time to do that. I would welcome the opportunity to talk one-on-one. Oh, I changed policies. I used to say for a free call, for a free follow-up. Not doing that anymore. The consults are paid now. So you can find the details at taxproblems.cpa. It's Tony Novak, and I'll be back again with another Tax Savings Minute.